Hey everyone, so I'm going live today with Stephanie from 100 Degrees Consulting. Um, her on here, but yeah, I'm super excited to talk to Stephanie today. This is such an important topic. I feel like a lot of people don't have much education around this topic. I think that it's one of those topics where people hear and they're like, yeah, I need to get a grasp of my numbers for sure. Um, but when it comes to actually getting a grasp on the numbers and buckling down and doing it, people are really just not educated on how to go about that. There's not that much information out there as far as how to do a good job at being good with your financials. So, yeah, I'm super stoked to talk to Stephanie today about this topic. Stephanie's a CFO. She is she's a CFO, and she also has, through her business 100 Degrees Consulting, she consults. Here, I'm just getting Stephanie on here, doing the tech stuff. Let's see here. Cool. I think that should work now. Um, but yeah, so Stephanie, hey Stephanie.
Hi.
So I was just telling the people all about you. So you're a CFO and you have 100 Degrees Consulting, which is awesome. And you basically work with startups and nonprofits and you help them better understand their financials so that they can make better business decisions, which I love because I feel like when business owners like start their business, they're like, yeah, I need to get a grasp on my financials, but no one really knows how to do it. It's kind of a specialized knowledge set, in my opinion. So I'm super stoked to talk to you about this today. Like, this is such a gift to everyone that's going to watch this, in my opinion.
Yes, yay. I'm so excited to chat too.
So, can you start off by telling us a little bit about you so that people can get more familiar?
Yeah, so I actually started out my career, like way at the beginning of my career, I thought I was going to be a lawyer. So I went to school, I got a job at this amazing law firm in Manhattan. And it was like less than a year in that I was like, what am I doing? This is not the right fit at all. But while I was at the law firm, I actually, the firm took on pro bono cases. And so one of the pro bono organizations that they worked with was this amazing nonprofit working in Afghanistan, helping farmers sort of rebuild their livelihoods after their land had been destroyed by, 3 decades of war. So anyway, I started working for this organization, and it was there that I really started just sort of latched onto the finance piece, because what I found was that, if you know your numbers, and you're able to use those numbers to make a greater impact on the world. And I was able to go to Afghanistan and really see firsthand the impact that this organization was making, due, in small part to the work that I was doing and really helping them understand and use their numbers. So I started working with nonprofits, and I spent about 10 years sort of traveling all over the world, from Afghanistan to Haiti to Nepal to a bunch of different countries in Africa, working in nonprofits. And then about 5 years ago, I was thinking, you know what, there's a lot of organizations out there, both nonprofits and purpose driven businesses, that really need financial leadership. They need somebody looking at these numbers for them strategically, but they can't afford somebody full time, or maybe they don't need somebody full time. So I started this sort of fractional CFO concept and just actually started reaching out like cold emails, to organizations I thought would be a good fit. And yeah, 5 years later, we've got a team of CFOs working with businesses and nonprofits really around the world, in that capacity. So yeah,
Love it. Awesome. And where are you based out of, by the way?
so I live right now in Buffalo, New York.
Okay, great. Awesome. So you're like way closer than I thought. Awesome.
Yeah,
Um,
yeah. Where are you? Are you in New York?
yeah, I just moved back to New York. I was in Colorado for a bit, but now I'm back. I like moved during COVID, which was interesting, but I was kind of like, this isn't gonna get any better. I should probably move now during the summer.
Nice.
So
Yeah,
yeah.
awesome.
Yeah. So okay, as I was mentioning before, like financials when it comes to entrepreneurs, it's just like a pretty scary topic. People shy away from it and therefore they kind of ignore it. So can you tell us a little bit about why entrepreneurs shouldn't feel this way, like this, it's kind of dangerous to like ignore your numbers. Can you tell us a little bit about the importance of financials and just getting intimate with it?
Yeah, so I love the quote that what you focus on expands. Because a lot of times we hide from our numbers. It's scary, it's hard, it's confusing. It's not a place that we really feel comfortable with. And so we run from it or we pretend it doesn't exist. We don't ever look at our bank balance or our P&L. And I think that's exactly the reason why. Like, we don't really know what we're looking at. It feels very uncomfortable. Maybe the numbers, the amount of money we have in the bank isn't where we want it to be. So we just kind of like shy away from it. But it's so important because of that quote that I just said, what you focus on expands, where you're giving your time. It's sort of similar to another quote that I really like, where the attention goes, energy flows.
Hmm.
And so it's really important because what your financials are going to give you, and you don't have to be a CFO or an accountant or a bookkeeper or anything, but what your financials give you is another set of data that's going to help you make better decisions. So I'm sure entrepreneurs, like, you're looking at your sales data, like where your customers coming from, where your clients coming from. You're probably looking at maybe your website stats or your social media, engagement rates, things like that. But your financials are just another data point to really help you manage and help you see into the future. And so when I think about looking at your numbers, I think of two different things. Looking back, right? Like looking at your P&L for last month or past year, that's what's already happened. And then combining that with looking forwards, like creating a forecast and really being able to see into the future of your business and having that vision, like literally in front of you, black and white, being able to see kind of where your business is going. I just see so many light bulb moments with our clients all the time. Like, oh, I didn't realize that, like, my expense growth was outpacing my revenue growth. Like, I just didn't know where the cash was going, but now I can see why. So it just helps you make such better, more informed decisions if you know your numbers.
Yeah, totally. That makes sense. Like kind of building a literacy around it for sure.
Yeah.
So what are kind of for first year entrepreneurs, what are some of the things you see that they don't do and they should be doing?
Yeah. So the biggest thing is not separating your business and your personal.
Yep.
Um,
Hmm.
so mixing things up, and maybe you've gone so far as to, like, okay, I have my business bank account, but then, oh, I didn't have my business credit card with me, so I just swiped my personal card, and like things are all intermixed, and then it just becomes a hot mess to even try and make any sort of sense or analysis out of. So that's probably one of the biggest mistakes I see. And oftentimes clients will come to us maybe a year or so in, and then we have to unravel everything. And it's
Yeah.
really, really hard and time consuming and then expensive for them. So separating business and personal from day one is so, so important. And then the other sort of mistake I see new entrepreneurs making is that they're not tracking everything in one place. So, like I said, maybe, some stuff is on the personal card and you've got some stuff out of the business account and you're not even really keeping track of it anywhere. So, I'm talking about like QuickBooks, right? Or having some sort of accounting system that is keeping track of everything for you. QuickBooks makes it super easy. It's automated. You connect it to your bank account and you don't really have to think about it. Some people aren't ready for QuickBooks, so they don't want to pay for it. They don't want to use QuickBooks. Even if it's just a spreadsheet where you keep all of your revenue and all of your expenses listed out, that is okay too. But I think the key is to keeping everything together in one place, because again, you're not going to be able to make sense out of anything and really sit with your numbers if they're all over the place.
Totally. Yeah. Like I know some entrepreneurs where when I ask them like, "Hey, how much in revenue did you bring in that like last year?" and they're just like, "No idea." And it's like that first year like mentality, and you kind of are just like so overwhelmed with the process of building the business you don't even want to look almost.
Yeah,
Totally.
yeah, yeah, exactly.
So how about for those who are kind of like post year one of their business, what are some things that they should start thinking about when it comes to their financials and numbers?
Yeah, I love when you get to the point where you do have a whole year of data because then you're starting to get some comparisons.
Hmm.
So I really like to look at a handful of certain metrics compared to yourself. Like it doesn't matter what your friend's profit margin is or what that other business that you know of, what their profit margin is. I really like to compare metrics to yourself. So with a year of data, you can start calculating, okay, what's your monthly profit margin? And then look at it for, the last 12 months. Look at every single month. What trend? Where is that margin going? Do you see that profit margin like shrinking over the last 12 months? Is it going up? So comparing, looking at that metric compared to yourself. I also like looking at your burn rate, which is just your average monthly expenses. So how much are you spending every month? How much is going out the door? And I ask a lot of entrepreneurs this question, and most cannot give me an answer at all. Like, it doesn't need to be exact, right? But are you spending 5,000? Are you spending 50,000 a month? Roughly, what are you spending a month? So understanding what that number is for your business as well is super important, because then that way you kind of know, okay, well, if my burn rate now is about 10,000 a month, I need to be bringing in at least 10,000 a month to make sure that I'm in the black. So looking at that metric every month is important as well. And then the other one I really like to look at too is your months of cash on hand. So basically, how long could your business operate as it is right now, paying your bills, paying yourself, paying your team, if no more revenue came in the door? Like if nothing else came in, how long could you operate? And this was something that we were looking at with all of our clients. I mean, we do it already, but we were all very in tune with this particular metric back in March when nobody knew if any more revenue would be coming into any of our businesses. We didn't know what was going to happen. And so knowing how much money you have in the bank, like, okay, it's enough to cover 4 months of expenses or 6 months of expenses at any given point in time, I think is a really important metric for, post year one entrepreneurs to look at as well. And a good goal, I would say, is somewhere between 3 and 6 months. And so that's something that, after you've kind of got that first year of your business, starting to work towards that goal, I think is great, and staying in tune with that metric.
Yeah, that's interesting. It kind of like brought the question to mind of like bad habits as an entrepreneur. Like when you do get money, it's kind of like there's a possibility of bad habits of like overspending and like being like really aggressive investment wise. Like sometimes when you get like good cash flow coming in, you're kind of like, oh, I'm gonna like invest in X, Y, and Z thing, and then you just kind of put yourself in a place where you lose that 3 to 6 month cushion for your business. So like, where is that line of making that decision of, is this time to like put aside that 3 to 6 month cushion, or like because I'm growing, should I keep like investing in my business and like, making those kind of purchases? So I guess like, from a CFO perspective, like when is it right time to make those decisions, and what are kind of like the decision making factors you're thinking about?
Yeah, that is such a good question, because what we see often too is a lot of CEOs operating from your bank balance, right? So if, like you just said, if you get like an influx of cash, you're like, okay, gonna hire that coach, gonna buy this thing, gonna like add 3 new team members. And what you don't see is what is the impact of that decision 3 months down the road when maybe you don't have such a great month, and how are you going to pay for all those team members? So what we really like to do, and this is where that forecast comes into play, because we have mapped out our revenue, our expenses, our cash flow into the future. So we can really easily kind of play around with the numbers and say, okay, well, we just did get this influx of revenue, and I really want to hire this business coach. So let's plug the numbers in and let's see what impacts that has. Let's see, what that does to our cash flow if we do make this investment. So I think that having that future visibility, super important. And then I think the other piece is looking at what your profit margin is doing, right? If you see, again, if you're looking at your margin every single month and it's, 10%, then 20, then 30, and 40, and you've got like a 60% profit margin, you probably have the space and capacity to add in some investments again. So I think it's a combination of really being able to see into the future and knowing that the decisions that you're making today are going to be sustainable in the future, as well as looking back and understanding what your business is doing and the trends and like, okay, my revenue is really growing. My expenses are kind of staying flat 'cause there's not really much else I need right now. I probably have some space to invest.
Great. Yeah, I love that. So tell us a little bit about what is a CFO? Like, what's the importance of a CFO in a smaller business? What is kind of the importance of that figure in your business's life?
Yeah, that's such a good question because oftentimes what we see is people getting very confused between a CFO, an accountant or a CPA, a
Yeah.
bookkeeper, a financial advisor, and a lot of times people think they're all the same person, and they're definitely not the same person. So your financial advisor is somebody that's kind of helping you with risk management, long-term wealth planning, things like that. Like you may have one in your personal life helping you figure out investments. That's your financial planner. The bookkeeper is the person that's kind of in your books, doing the day-to-day coding transactions, reconciling your bank accounts, really like that line item detail. Your accountant or your CPA is your tax person, your tax expert. They probably file your taxes. They may tell you how much in estimated taxes you need to pay. And then your CFO is really that strategy. So we come into a company, an organization, really thinking from like that 30,000-foot view. And just like I said, mapping out revenue, expenses, cash flow to help the CEO really figure out how to make decisions and how to grow the business based on the numbers. So we'll help create models, financial models and projections for companies to figure out like, okay, if we were to, acquire this company, what would that look like? So we'll create a financial model to help them visualize like numbers wise, what that would do to their business. So we kind of help, I would say, help the CEO take their vision and put it into black and white numbers to help them, figure out what to do really. And we collaborate really well with the bookkeeper because we have to have really good data going into the accounting system. So we have good data to analyze. And we work really closely with the tax accountant as well because we want to know what cash is going out the door for taxes. We always include that in our projections. But then the CFO kind of like pulls that all together and then looks at the numbers from a more strategic perspective.
And as far as like introducing a CFO into your business, like size wise, when should a business start looking for someone like that? Like when is it appropriate?
Yeah, so most of the companies that we work with are at least a few 100,000 in revenue and up. If you're just hitting six figures, that's amazing. Um, but you probably don't quite yet need a CFO. You may not be making those really, really big decisions that you're like, I just need a second set of eyes on this. But once you start hitting, three, four, 500,000, you probably have a team, at least to some degree. And there may be questions about, 1099 contractor versus an employee and kind of modeling out the cost of that. You probably have some bigger decisions to make in terms of investments for the business. So I would say, yeah, a few 100,000 and up is when we see most of our clients coming on board.
And you mentioned strategy for like a CFO helping with that. So I'm curious, like, what are some of the, like, I'm trying to like contextualize, like, for a startup, like, they're thinking of strategy from a numbers perspective, and they're kind of like, well, um, what are even the discoveries that could be made? Like, what are kind of like the transformational aha moments that are made by looking at your numbers that could like completely reposition, re-navigate the business in a positive way? What are some of like those like big discoveries that are made possible by, having someone pretty savvy with the numbers in your team?
Yeah, that's a great question. I was just thinking of a particular client where we were analyzing their like sales teams basically, and we we were trying to help them figure out aligning their sales team cost, like the cost of having these employees on board, with their pricing to their clients. And so we basically did an analysis and figured out like, okay, your sales team is currently generating or is currently costing X and they're generating Y. And the Y, the amount that they're generating is not really enough to cover both their cost and like their piece of the overhead of the business. And so with that information, we were able to both help them adjust pricing as well as kind of shift some of the team dynamic around a little bit so that the teams were basically more profitable. So it's more than just like looking at the P&L. Oftentimes it's hearing a CEO or a founder's challenge, like, hey, my sales team's like, it doesn't seem like they're generating the revenue I think they should be generating. Could we dig into this? So it's taking something from their head that they're like, I think this is an issue. Or maybe like, oh, I'm curious about this. And then pulling some numbers around that and digging a little bit deeper to help come to those light bulb moments.
Yeah. That's great. Like that just kind of brought to mind like almost like fine tuning the ship of your business and like how you can have so many different leaks here and there, but if you have a CFO on your team, you're basically like saving so much money by having someone just completely focus on the number side and where are we leaking money, where we shouldn't, how can we like really refine this so that it's perfectly fine-tuned. I've never thought of it that way, but that's like makes a lot of sense for sure. Because especially if you're like
Yeah.
making multiple six figures, like you can be bleeding money everywhere and you just like don't even realize it.
Yeah, exactly. And I think that, the first inclination of people when they're like, okay, we need to like tighten our belts a little bit and trim down expenses, or like, okay, what's the biggest expense line? Let's cut that. And we saw this with one of our clients, like, oh, one of our biggest expense lines is advertising. And so they were about to start thinking about cutting that. I'm like, wait a second, let's analyze first the ROI on this particular line item to figure out, is this the thing we really want to cut? Like if it's generating a return, yes, it looks like the biggest expense because it is, but if we're seeing a return there, let's think about something else. So I think it's also, yeah, just providing just a second person to kind of be combing over things with the financial perspective in mind.
Yeah. Awesome. And so how do you feel about business credit cards, taking out loans for the business? Like, what is your perspective on all that? When is it valid to take those routes? When is it kind of like you're jumping the gun a little bit there?
I love this question so much. So I'm not anti-debt. I don't think that all credit cards are bad or all business loans or lines of credit are bad. But of course, there's a big but in there. You need to have a plan, right? So I see there's a couple of instances where I think that taking out a line of credit or using a credit card is okay. And it's when you have a proven business model. So you know that there is future revenue coming. And maybe it's just a timing issue, right? Like we've got some clients who Q1 through Q3 are very, very slow for them in terms of sales. And then Q4 is when they bring in like 90% of their sales for the entire year. And so what that means is that there's that period at the end of September when like, whew, we're coasting into October on fumes. It's just the cyclical model of their business. And so taking out or having a line of credit available or putting expenses on the credit card for that small window when they know that all of their revenue is coming up in just a couple of weeks, that is totally fine. The reason that's fine, the reason they know that is because we have a forecast. So the second instance where we've seen clients take out a loan or a line of credit is when they need capital for production. So they're producing some sort of product and they need money to get that product made, and then they're going to sell it, obviously. So again, it's a bit of a timing issue, but that's another instance where we've seen that work. The reason it works, again, is because they have a proven business model and they've done this before, so they know that the revenue is coming. And in addition to that, we have it all mapped out in this sort of monthly format where we've got like, okay, every single month we've got our revenue, we have our expenses, we know what's coming. So we can see into the future. We know like, okay, we just need this cash to float us like 8 weeks and the revenue is coming and we're good. So when I don't really like the idea of putting expenses on a credit card or a line of credit are to fund like ongoing operating deficits. Like if your business is just consistently in the red and you haven't really figured out what switch to flip to get yourself back in the black, I would not take out a loan or line of credit, because how in the world are you going to pay it back? If you don't have a plan for paying it back. So to fund ongoing operating deficits, I definitely would not do that. I also, and this is my personal opinion, I would not go into debt to start a business personally. So if you've got capital that you're willing to invest, that's like your own personal capital, that's one thing. But taking on debt to start a business without a proven model is not something that I would recommend either.
Yeah, and I totally agree with that. I think that a lot of entrepreneurs get kind of obsessed with the idea of being super official when they first start out. So they're like, I need to spend 20 grand on building this like app because I need to be official, when in actuality, they could find a much more affordable option that they could probably like do like a plug and play, like Squarespace-esque app. But it's just this obsession with like, I need it to be custom, I need it to be official, that a lot of entrepreneurs don't take the easier route of just like, let me just make some sales first and then we can buy that. So yeah, I totally agree with you. I think that like, there's so many stories of this in like the coaching industry of like, I took out $20,000 from my credit card to start my coaching business and now I'm a millionaire. And it's like, this is so bad. This is such terrible financial advice. People should
Yeah.
not be sharing this story as like a hero's tale.
No. And especially for a service business, they're like, you don't need money to do anything. Like you just
Yeah.
need your brain, basically.
Yeah.
So there's ways to start. And I think also people kind of, get really excited about the potential to scale, which I understand. It's fun to think about like, oh, I could grow 500% in 1 year if I just had like an extra 50K. But what if I'm always very conservative when it comes to that kind of thing. And so I just like to go with what's proven and what's known. And there's nothing wrong with scaling a little bit slower.
Totally. So, you kind of touched on this earlier. So, with this pandemic that happened, it caught a lot of people by surprise, especially business owners. What do we have to learn from this situation as business owners? What can we do in the future to kind of prevent some of us who got screwed over by, the lack of savings we had put away? Like, what did we learn from this? What can we do in the future to kind of prevent a situation like this from completely hitting us out of nowhere when it comes to our business?
Yeah, I think that knowing a few key numbers in your business, first of all, is very important. Knowing your burn rate, how much money do you spend every month? How much does it cost to run your business, basically? So knowing how much it costs to run your business and knowing how much cash you have in the bank and how long you could operate, I think are two key things that everybody should know, like at all times. And again, it doesn't have to be down to the penny, but like roughly know, okay, I've got 4 months of expenses in the bank. Roughly know, okay, it costs $10,000 to run my business every month. I think that is key. One thing that we've also been encouraging clients to do, because I think everybody's instinct back in March was like, cut all the expenses, just cut as much as you can, which, normally I'm not like a cut expenses, no more lattes budgeting kind of person. I'm more like, okay, let's figure out ways to expand revenue. But I
Yeah.
do think one good exercise that a lot of people did was really take a deep dive into your numbers. Because I think after you've been running your business for a few months, a few years, we all know like we sign up for the thing that we use twice, and then 3 years later, we're still paying for it and we're not using it. Or really thinking outside of the box, like, okay, I have this, marketing coordinator, contractor person. Are they generating the ROI? Are they doing what I need them to do in my business? So kind of taking a step back and not just sort of rolling with whatever expenses you've been rolling with for the last couple of years or whatever it is, and really thinking critically, like, is this, helping the bottom line of my business? Is this making an impact? So I really did like that exercise that we kind of helped a lot of our clients do, and I did it myself for our business too. So thinking about that on a quarterly basis, like how can we make sure that our businesses are operating as lean as possible, not like on a shoestring, not scrimping by, but really as kind of like as tightly as possible, right? Every expense has a purpose. Every expense has some sort of ROI. Maybe it's our time, maybe it's money, but there's a purpose for everything within our business. I think that exercise, quarterly or annually, is a great thing to do too.
Love it. Great. So how can people connect with you? How can people learn more about what you do? Do you have anything that you'd like to share with everyone and everyone that's going to watch afterwards?
Yeah, so at 100degreesconsulting.com/profit, there is a template there. I've talked a lot about this plan and a forecast and mapping things out, and there's a template for it over there. So 100degreesconsulting.com/profit.
Awesome.
And it really just gives you a very simple template for mapping out your revenue every single month, all of your different expenses every month, and then it's tied to a cash flow, which I find just the most helpful, because I think we all know, just because we have great revenue doesn't necessarily mean we have cash in the bank, and vice versa. So it's tied to a cash flow as well. So that would be a great thing to check out if you're needing some resources. Otherwise, if you just want to connect, I love Instagram, and my handle, my name should be right here, so we should be able to connect that way.
Awesome. Stephanie, thanks so much for taking the time today. This was so informational. I learned a lot. And I know that everyone who watches this is going to be like soaking this up, because this is all knowledge every entrepreneur needs to know, especially with this pandemic this year. I think it made it very clear you need to really get down with your numbers.
Yes, for sure. And we're starting to get a lot of people reaching out, because I think that, as we're starting to wrap up the year, people are like, oh boy, like I really need to get a handle on my numbers. I want to start off 2021 like on the right foot. Let's put 2020 behind us. And so, yeah, we're starting to see a lot of movement there. So if financial management and really understanding your numbers is a goal for you in 2021, I would love to chat.
Awesome. Sounds good. All right. Thanks so much, Stephanie.
Yay, thank you.
Have a good week. I'll talk to you
You
soon.
too. Bye.
Bye.